Okay, today we are still in accounting, and under it, the topic we will look at today is subsidiary books of accounts. But before we dive into the topic properly, I wanted to understand these two things. In accounting, we have two books of accounts. That is the principal book of account, which is the ledger, and the subsidiary book of accounts we are going to look at today. And you also need to understand that in accounting, the first entry book of accounts is the subsidiary book of accounts. Okay, so today the topic that we have is subsidiary books of accounts, and under it we'll be looking at subtopics like the definition of subsidiary books. We'll be looking at the divisions of these subsidiary books, and under the division we have 6 of them in numbers, but I will ensure that I do justice to sales day book today. So in a subsequent or part 2 of the videos, I will take other ones as we proceed, you understand. So firstly, let's quickly look at the definition of subsidiary books of account. We said that subsidiary books of account are the book of prime entry. You don't call it subsidiary books, you call it prime entry, where all transactions are initially posted on it before they are being transferred to the principal book of accounts, which is the ledger. Is that clear? Okay, that's the definition. Now let's briefly look at the division of these subsidiary books of account. These subsidiary books of accounts is being classified into 6. We have the sales day book. If you don't call it the sales day book, you can call it the sales journal. If you don't call it the sales journal, you can call it sales day book. That's for sales day book. Number 2, we have the purchases day book. If you don't call it the purchases day book, you can call it the purchases journals. They are all journals. Okay, we have the returns outwards journals. We have the return inwards journals. And we also have the journal proper or the principal journals. If you don't call it journal proper, you call it the principal journal. It's the same thing. And lastly, we have the cash book. So let me pick the definition of each of them. Remember what I said, I'm going to do justice to sales day book in this particular video. In a subsequent video, I will also expatiate others. Just follow me, you get it. All right, the first thing we want to look at is the sales day book. We said that sales day book is a prime book of record in which all credit sales, note that point, all credit transaction, all credit sales of the organization are initially recorded here before it is being posted to the ledger, which is the principal book of accounts. Okay, so that's the definition of the sales day book. And under the sales day book today, we will look at the format and some illustrations and how they are being posted in the principal book of accounts. Just follow me. So let's quickly look at the format, how it looks like. So we have the sales day book. Remember, you don't call it the sales day book, you can call it the sales journal, it's the same thing. So this, the format, we have the dates, the particulars, we have the volume, we have the details, and we have the total. Okay. All right. Okay. Now, this is the format of the sales day book. This is how it looks like. And remember that in this sales day book, only credit sales are being recorded down here. So I will explain each of the columns now. Just follow me. Now, column for date, this carry the day, the month, and the year the transaction take place in the organization. While the particulars has to do with a brief description of what really happened, like what did you sell at that particular date. That is a particular, you carry a brief description about the transaction that really happened at that date. The volume will also tells you about the sales ledger, that this particular transaction will be posted to, or the invoice number where the transaction was actually picked from. Okay, so it falls under this column. While the details will display the total, the sum of each transaction that really happened will come here. And in a situation where some discount was given, it will also reflect here before it is. Then after discount has been deducted, it will be now posted under the totals. Remember that discount has to do with the reduction in the selling price of a product. Okay, so we proceed. This is the format. I'm going to pick illustration, then we work on it, okay, for better clarity and understanding. So let's assume XYZ company. This is the name of the organization, the business we are looking at, XYZ. That's the name of the company. Let's assume on August 6th of August 2004, customer A, let's just give a name, like let's say Mr. Rufai purchases an item from XYZ company on credit. Remember, this is a credit transaction. Okay, so let's say he bought 5 packets, let's say 5 packets of biscuits at the rate of 500 naira each. And on that same date, he also purchased 3 bags of sugar, let's say at the rate of 200 naira each. 200 naira each. And XYZ company decided to grant him some discounts. Remember, we said that discount comes in 2 ways: the trade discount and the cash discount. So let's say XYZ company decided to grant Mr. Rufai discount, trade discount of 5%. Let's say 5% trade discount was issued to Mr. Rufai. Okay, let's assume another transaction happens in the organization. Let's say August 10, 2024. Another customer visited XYZ to purchase on credit. Okay, and you have the name Miss Siphon. This is Siphon. Okay, this is the customer, and she purchased 2 bags of rice. 2 bags of rice at the rate of, let's say, 500 naira. 500 naira each. Since he just purchased 2 bags of rice, no discount was granted or was issued to her. Okay, let's see how we can actually work with this or post this transaction in a sales day book. Remember, this is the invoice. Sales day book picks its transaction from the invoice. Okay, the invoice. And also note this, that in sales day book, anything that has to do with cash sales does not have expression here. You don't have to record it here. Only credit transaction, only credit sales that you will record under the sales day book. And any sales of fixed assets will not be recorded here. So note this. And remember that sales day book do not also follow the law of double entry principle. Are we together? So note that fact, very, very important. Let's look at how we can solve the questions below. Okay. Permit me to use the format since we are already here. Okay, because of space, let me just let's do it this way. We have the date. Let's say here solution. Remember, this is XYZ company. This is their sales day book. Sales day book. Don't forget. Okay, we have the date, the particulars. We have the volume, we have the details, and we have the total. Remember, that's our format. Okay, roll it down. Okay, the first transaction that happened take place on the 6th of August 2024. So you come here, you say August 6, 2024. And this particular, you need to give a brief description of what actually happened on that date. And we said that 5, remember you need to include, it's very important, include the customer's name. And that is Mr. Rufai. Okay? So having done that, come here. Narrate what happened. We have 5. He purchased 5 packets of biscuit. Biscuit at the rate of 500 naira each. And how do you get the figure? Let's assume we are posting this today. Sales ledger, just come here and write SL. Okay? So you just say 5 times 500, that gives you 2,500. Bring it here. 2,500. Okay, the next transaction. He bought 3 bags of sugar. 3 bags of sugar at the rate of 200 naira each. 200 naira each. Are we together? Okay, so if you multiply 3 by 200, that will give you 600 naira. Yes, that will give you 600. So just come here, right there, 600 naira. 600. So add this up. What do you have? We have a 0, 0. 5 plus 6, that's 11. Keep 1, carry 1, add here, it becomes 3,100. Now remember that Mr. Rufai was given a discount, a trade discount of 5%. Sorry, this was a trade discount. This discount. Trade discount. Please note that trade discount of 5%. So you come here, just a 5% trade discount. And how do you get it? Just say 3,000, bring in the amount, the lump sum. This is the actual amount he's supposed to pay for the product he purchased. But because he was granted a discount, there will be a reduction in this list price of that product. Just say 3,100 multiplied by 5 divided by 100. Anything percent is normally divided by 100. So we are good to go. If you multiply this, you will be left with a discount of 155. 155. This is the discount that was granted him. 155 naira was the discount given to Mr. Rufai for purchasing this item. So what you need to do is for you to deduct it from the list price of that product. And if you say 155 naira minus this, you are left with 3,340. Let's say 3,000. So you post the amount here. 3,346. Okay. 3,346. Let's check that out. So I said 3,100 minus 155 naira. So sorry. Okay, we didn't get it. So The correct figure is 2,945 naira. This is the actual amount of money that Mr. Rufai will pay for these items he purchased from XYZ company. So we are done with Rufai's transaction now. Now on the 10th of August, just write the August 10, 2004. We have another customer by name Miss Siphon. Miss Siphon. Underline this, sorry. Okay. So he actually purchased 2 bags of rice at the rate of 500 each. So you bring here 2 bags of rice at 500 naira each. And if you multiply 2 by 500, that gives you 2 times 500, that gives you 1,000 naira. So come here, write 1,000. Bring it here, 1,000, since there was no other transaction. Add it up to this one. So we are left with 3,945 naira. Now this amount you see here will be posted. Remember I told you that in accounting we have 2 books of record. The first one is the subsidiary books of account, and the second one happens to be the principal book of account. Now, having done justice to this, you need to transfer this amount to the principal book of account, which is the ledger now. And under it, you will post it on the credit side of the ledger. So we come here, close the book by writing under here, transfer to the ledger. Okay, let's see how we can actually post it on the ledger account. We are done with the sales day book now. This is the first book of record that you have to record all the credit sales in the organization. So having gotten this, you need to transfer this total to the ledger account. And remember, when you are doing that, the sales account will be credited with this amount, while the individual account, the customer's account or the personal ledger now, will now take their actual amount. Okay, so let's see how we can do that. So come here, the first account we need, this is the ledger now, sorry, this is the ledger account. And under this transaction, we have the sales ledger and the personal ledger. We have the sales ledger and the personal ledger. So let's post it on the sales ledger or sales account. So you come here, you say sales ledger account. Remember that ledger follows the law of double entry, which states that every credit transaction must have a corresponding debit entry in another account. Okay, so we come here, record this total on the debit side of this sales ledger because it's a credit transaction. So we are giving out value, we have not gotten any value in it. So you now put your naira sign and you fix in the amount, which is 3,000 naira. 3,000. This becomes your sales. Sales 3,945 naira. This is how you present the account. Now under the individual's account, that's in the personal ledger, which is the customer's account. Now you are going to debit it because they are the one that receive values. Remember, the double entry system says that debit the receiver, credit the giver. So in sales ledger account gives out these items, while Mr. Rufai's account, being the personal account, personal ledger, Mr. Rufai's account okay, what we need to do, put in your debit. This is the debit side and this is your credit side. You are going to debit this account because Mr. Rufai received those items. And how much was it? Remember, this is sales. 2,945 naira. Okay, this is how it will be. Then we move to the next customer, which is Mesifo account. How the credit and the debit. You're going to debit this account too with just 1,000 naira. So you come here and say sales 1,000 naira. That's how it is being done. So you can now see that the first book of record is the sales table, or the subsidiary. Let's just call it the subsidiary books. And under the credit sales, this is the first book of record. You record all those credit sales before you now transfer them to the principal book of account, which is the ledger account. And under it, you can see that this transaction has been split into two accounts in the ledger, which is the sales ledger account and the personal ledger account. This personal ledger account talks about the customer's account, the individual account. So this is the end of the topic. Please do well to subscribe, drop your comments on the comment section, and do well to follow. Thank you.